Stock of the day, Bank of Queensland. They obviously flagged their first half results on Friday, and what was most noticeable was not only the provisions that they are making, a $200 million write-down, and also a $60 million provision for risks, but most importantly was the dividend cut, which was, I would have thought, unexpected for the market. So why don't I check in, I'll start with you, David. What's your view on this regional bank here in Australia?
Yeah, you're right. The dividend was a bit of a shock that the dividend was cut and certainly below our expectations. We weren't overly concerned about as much as it sounds terrible, the $200 million write-down of goodwill. That's more of an accounting issue. So from an operational point of view, weren't overly concerned about that. And think that the provisioning of the $60 million for risk is actually a smart move. They've got new management that have come in. Patrick Allaway has come in as CEO and Warwick Negus as chairman. Warwick Negus in particular is very experienced in the field. So we're actually reasonably positive on BOQ. We think at current levels we've got an accumulate recommendation on them. But our fair value is $8.80, so we think that there is quite a bit of upside in the business. But it is going to be hard going for BOQ over the next year or two. What was a little bit disappointing in their result or their pre-announcement was the fact that their net interest margins were lower. So, their net interest margin, we're forecasting about 1.8%, which is compared to a number of the major banks, which are now over 2%. So that's a bit of a disappointment for them. Think that there is value in the stock, and those that are prepared to stay with it over the long term will be rewarded. But having said that, over the last 12 or 18 months, it's been an underperformer, and shareholders have been disappointed with the performance to date.
Yeah, no, interesting comments there. And clearly there's been a lot of management changes with the company, which I did read today. One of the brokers was concerned about that you have seen so much turnover. How are you seeing the stock, Daniel?
Yeah, certainly some similar sentiments there. One thing with the management changes is usually you see, potentially any skeletons in the closet may get aired out. So obviously the CEO wants to come out and start on the best foot possible. One of the positives, though, was that there was some concerns whether or not there might have actually been fines applied to BOQ due to their some of the non-financial risk measures, so investments in cybersecurity and AML and things like that. And fortunately, there wasn't any penalties. Perhaps if it was one of the big four, APRA would have reacted differently. But we thought that was a positive. But we're probably a little bit more negative overall in the stock. It actually has one of the most challenged funding structures out of all of our banks, certainly the highest cost funding structure. And for that reason alone, we're probably looking to exit potentially after the next dividend. We want to keep that dividend that they'll be coming up in the next report, but potentially looking to decrease our exposure after that. So likely more on the cautious side, even though it is cheap.
Fantastic. So our experts today, sort of lukewarm, cool, possibly not racing in there, and in the case of Daniel, taking some profits moving down the track. So before we move on